Hey guys, Mike here. So obviously got a holiday week coming up here, and it's always interesting to see how the market actually performs, as well as we'll have a shortened week because we'll be closed on Thursday and it'll be shortened on Friday, closing at 1 p.m. on Friday. And sometimes you have terrible weeks during holiday weeks, and sometimes you have good ones. We're going to see exactly what you can expect on this one, and I've done some digging for you on it, as well as what really this whole week, and not to mention the rest of the month, hinges on more than anything when it comes to this, whether or not we're still in a rally or not, right? I mean, we know we're in a volatile market, but the question is, are we still in a rally, or are we going to start selling off again? And so, if you look, like I said, you're going to have the New York Stock Exchange and the NASDAQ be closed Thursday for Thanksgiving, Friday close at 1 p.m. But more importantly, what can we expect from a Thanksgiving week, right? And historically, what you're looking at, this breaks it down by the days. And so if you look, Wednesday and Friday tend to be your best days. Wednesday tends to be the best overall, as you can see right there. And you look at the median returns, percentage positive and all that stuff, and you can see right there, 78% positive for the last, I believe this is the last 50 years on Thanksgiving. And then Friday as well, but really Wednesday is what you're targeting there. And we can even break it out even further by the best performing sectors over the last 10 years. And you can see right there, percent positive for household goods and construction. You're looking around, what was that, 74% for personal goods, drugs and groceries, 74% for automobile parts. Technology is still 67%, so not bad, as you can see right there. And going over the last couple of years, you see in 2020, we had a positive Thanksgiving week. But then that's not always guaranteed, because you roll into 2021 and you can see we had a terrible Thanksgiving week in the market right there, especially the week preceding it was not good at all. Big sell-off there. And if we go back to what a bear market looked like in 08, believe it or not, you actually did have a positive week. Even as bad as 08 was, we still had a nice green week. And please don't forget to hit that like and subscribe button and share this video, guys. And I even went back and looked at 2015, 16, 17, 18, 19. I believe every single one of them were positive for the week. And so I don't know if short sellers just happen to go on vacation during the holidays and let the bulls actually enjoy the holiday weeks or not. But for some odd reason, it tends to be positive. Most holiday weeks tend to be positive also. But for this week upcoming, we do got two things to me, which obviously the market will hinge on, because remember, we are long term so far in a bearish trend versus a short term bullish trend. But you can pretty much bet these two things right here are going to decide whether or not we're going down or up. And the first is going to be the dollar. And understand you got this inverse head and shoulders that is playing out. We're almost right there at the neckline. And so if this breaks up and breaks 107.20, I believe it is, we could see 111. And that is not good for tech stocks, especially semiconductor stocks. And we were talking about this in the Discord. I mean, you can almost go to a penny. As soon as you see the dollar rallying, semis, hit the crapper, right? And so do most tech stocks. And so if the dollar does rally, then you can bet money you're going to start seeing more selling pressure on these tech stocks, especially the semiconductors, which a lot of those are overextended at this point in time anyway. They've gone up so fast in such a short amount of time. So there's been no consolidation almost at all for them. And so that's going to be very interesting to watch. Keep a close eye on that one. And then the other one's going to be, which everybody will be watching, is going to be when the Fed releases their minutes and Jerome Powell speaks, which will be on Wednesday. And you can see the minutes are going to be released at 2. Jerome Powell will speak before that at 1:30. And so everybody will be watching that. And you'll have some economic data, which I don't believe is going to rock the markets or anything, but that's going to be the big one to see if, there's still this narrative of now that the pivot is actually not them lowering rates or not even freezing rates, is them slowing, not doing 75 basis point rates, which is the stupidest thing you can ever think of, right? Like they can just continue to do 75, every time they meet. That's ridiculously dumb, but the market is extremely desperate. And so of course it's like whatever narrative it can paint to try to pull people into it and try to move this thing back up. That's what they're going to go with. So now they say they're not going to do 75 in December. Oh my God. It's like people don't even realize, I think the numbers, and I'll probably screw this up, but I think in history, they've only done 16, 75 basis point hikes, if that many. And they just did, 4 in a row, right? And I don't think they've ever done that before. And so forget about what the end game is. I think the 5% raise what they're trying to get to, maybe even above that. everybody just looking at, oh, it's 50 basis points, then we'll go 25, 25. That's bullish, and it's like, whatever, man. If it's bullish, let's just roll with it and go with it, right? Because it makes no sense whatsoever. But, that's what the pivot is now. And so that's what we're looking at. We'll see what the FOMC minutes say. And I'm pretty sure they're going to say is, yeah, we don't want to keep doing 75 basis point hikes. And so that would confirm to the market to go, oh, yay, we were right. Let's just keep rallying, even though the bond market seems to be telling a different story. They seem to be, the bond yields are moving up, right? And so they seem to be thinking something different what the stock market's thinking right now. So it's going to be interesting to see how that plays out. But I'll say this, whatever rally is going to happen, this is a lagging indicator, but I always tell you, I'll keep you updated every month on this, every time it comes out. The one thing you got to start seeing, you've seen every bottom, is you got to start having margin debt, right? I mean, right now, this is September, so I say this is a lagging indicator. But, you can go back at any other time, and before that market is going to start moving up, you got to have people start taking on a lot of risk and start taking on leverage and stuff to move this market up. Remember, it's not about fundamentals. It's about stock buybacks, free money, a lot of leverage, margin, stuff like that to absolutely push and push and push this market up. I mean, that's what you're looking at. And you can look at this in a different way here. If we sit here and pull out the margin debt yield percentage change, obviously you can see we've had a huge drawdown, which always happens in bear markets. But if you look, even before that bear market is over, normally you start to see some major moves very quickly moving up in margin, and we just hadn't seen that yet. And so that's, again, if we see in October all of a sudden we had a major move up, or maybe when we get the November one, then we kind of know. Again, it is lagging, I get that, but that's just what the market's made of, right? I mean, that's what made crypto go up so much, right? It was just all the leverage in crypto, right? That's what's made the stock market the last 10 years is if you got a pulse, you can get margin. That's just the way it is. It used to be harder to get it. Now it's not. Anybody, your grandma can get it. You can get it. It doesn't matter. And that's what's going to help actually move this market up even more. And I'll have a couple of videos coming out this week, which, somewhat touch on this or whatever. But, it's just, when are people going to be risk on? That's when you're going to know. You're going to know. And that's what that tells you is like, oh, risk is on now. Right, because I hear a lot of people say, "Well, I'm not touching margin right now. I'm got that back in the pocketbook. Not doing that yet because nobody wants to get margin call, right? Because this thing, obviously, we could turn south and go down even further, right? And that's the last thing you want to happen. I mean, that's what usually gets us into these bear markets. People start getting margin call, getting crushed, right? And so, another thing I was going to show you, and I told you this. Remember, small companies are what the lifeblood or used to be of the country, right? They make up over half the job and all that stuff. And I know we keep seeing these headlines like Roku came out and they're laying off more people and different tech companies. And understand, I'm not making light of anybody getting laid off, right? I hate it for anybody. But I need you to understand the numbers overall of these big tech companies. It's not even a drop in the bucket when you look at how many people are employed in this country. And I mean, you can see right here that this is the max number of all these layoffs that's been happening. You are looking at 48,000. What is that? 683,000, I believe. That's nothing. I mean, really. I mean, these are great paying jobs, which sucks for those people. But I guess the thing to really look at is how they're adding up very fast. But again, when it comes to the overall number of people employed, that's nothing. I mean, seriously, it just isn't. Again, they get the big headlines. Small companies don't come out. If Publix lays off people, you're not going to see a headline for that, right? It's not going to happen. I don't know if you have Publix in your area, some grocery chain in our area, but you're not going to see that, right? Sam's Whole Mart or something comes out and lays off the whole workforce. It's not publicly traded. It's not going to get a headline, right? I mean, that's what I'll keep digging on and figure out the small companies. We know they're putting in hiring freezes. We know they're starting to lay off and all that stuff, cut back on hours and everything, but these headlines, it looks great. Roku was like, we're laying off X percentage, and you come to find out it's like 220 employees. And again, not making light of the 220, I hate it for them, but in the overall bigger picture, that's just nothing. It's a drop in the bucket at best, right? And so that's what you got to keep in mind and understand. I keep seeing all these tweets about all these different indicators of flashing red for recession, all this other stuff, and the world's coming to an end. But, what it comes down to is we're still spending. Right, I showed you the debt. That's the biggest thing you want to look at is delinquencies and debt and all this other stuff. I mean, I don't think you're going to see a real pivot or a real change where people start to go, oh man, look at this, what's going on, until student loan debt kicks back in January, and then we have that big bill for a lot of households kicking in. then, you know, because you're talking about millions of dollars that are going to be going towards student loan payments that were going somewhere else, right? And it's going to be millions of dollars, right, every month. Maybe billions. I don't even know what the total amount is, but I know it's one of the biggest debts households have. And so that's something to keep in mind. I'm also going to have a very detailed video on the household market and what you need to be watching out for. And it's very important for you to pay attention to that video because of a certain factor I will show you in that video, right? And be prepared. Don't be that person that gets caught with your pants down going, what, we're in a recession? People getting laid off? Did I just lose my job? Oh my God. You know, start having those conversations now because, again, this could be the first time in history. I mean, it would be the first time in history. This mean indicators have been flashing red and everything else for us going 2023 and not going to some kind of mild to moderate recession, right? I mean, again, it could be the first time in history because everything's been thrown off by what our government's doing. You can tell they have no idea what the hell they're still doing. It's an unbelievable. UK, their government don't know what's going on. As I showed you the other day, they're just throwing everything in the wall and seeing what sticks, right? And so, you know, that's where we're at now. I'll have those videos coming out, so hopefully you'll pay attention and enjoy them. As we talk about this, you know, in the Patreon with the members, on put videos out. It's being prepared, right, for what's coming. And if it doesn't happen, great. But if it does happen, you're sitting there going, "Whoo, I'm feeling good." All right. When you prepare for a situation, you're a lot better off than going in there and getting surprised. Okay. And so, anyway, hope you guys have a good night. Hit the like and subscribe button if you got anything out of it as usual. Appreciate your support, and I'll see you tomorrow.